Yeah, good morning, everyone. Friday, US market ended more of a flattish, but if we see intraday, the market declined sharply on Friday and then recovered substantially and ended on a more of a flattish note. If we talk about the futures of the US market, they are mostly in positive, whereas Asian markets are showing some mixed reaction, wherein Hong Kong and China are more of a declined, whereas other market are marginally positive. If you see the commodities oil is more of a flattish at around $113 or marginally higher than the last traded on Friday. Whereas aluminum is up by around 0.5%, copper is up by around 0.5%, iron ore is up substantially by 4.5%, and steel is up by around 0.5%. But today, I think market will be more driven by the actions which has been taken by the government to cool off the inflations on Saturday. Government has reduced the excise duty on petrol and diesel substantially, and also put up some restrictions on the steel export, which will try to reduce the prices of the steel, and also even reduce the import duty on some of the product of plastic raw material to reduce their cost. So it's all directed towards reducing the inflation in the economy, but how the companies will react, it's more to be seen in this direction, and it will be more driven by stock specific in today's trade than the overall market. I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. Today, the market is likely to open on a flattish note, and we might see some range-bound trading session during the day. Nifty, from the last few trading sessions, we are witnessing that the 15,700 is acting as a very strong support level. And from that, we have seen a bounce back towards 16,300 odd level. Friday, we have seen Nifty manage to maintain a closing above 16,200, which gives some sort of a relief sign. Going ahead, this pullback rally is likely to be extended towards 16,400 to 500 levels as long as Nifty. So for today,
Yeah, for the
hello.
today intraday purpose, the Nifty has a support at around 16,170 level will be the first support level. Below that level, 16,100. Whereas on high side, 16,370 is the first resistance zones. Any more above that level, we expect the rally to be continued towards 16,450 levels on the higher sides. Coming towards the bank Nifty, we have seen a very smart pullback rally in the bank Nifty as well from 33,000 psychological level towards 34,200 levels. I believe this rally is likely to be extended towards 35,000 levels on the higher side. As long as Nifty sustains above 33,500, that is the crucial support level for the bank Nifty. For today intraday purpose, the resistance is placed at 34,550. Any move above that level will extend the pullback rally towards 34,800. Whereas on a downside, 33,780 is the first support level. Below that level, 33,500 levels can be seen. The overall view will remain sideways itself. Definitely pullback rally is likely to be continued as long as the Nifty and Bank Nifty maintains a positive closing above the mentioned support levels. Coming towards the Nifty Finance for today intraday purpose, the resistance is placed at 15,590. Above that level, 15,670 levels can be seen. Whereas on a downside, 15,400 and 15,330 levels are the important support levels. Stock specific, I believe that the TVS Motor really looks very good on the technical setups. If you look towards the daily chart, it has just formed the inverted head and shoulder pattern. Even on a monthly setup, it is on the verge of giving the breakout levels. Friday, we have initiated a buy call. Those who have missed the call, they can today also take a buy call above 692 levels. I believe it has a potential to reach up to 730, and one can maintain the strict stop loss of a 670. So I think that's it from my end. I request you guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, looking at the overall data, the data is good, but there's lot of volatility in the index. So one day it is going to 300 points down, another day is about 400 points up. the crucial levels on the downside are around 15,800 and 16,000 levels. So unless these 15,800 is broken on a closing basis, we might not see further selling coming in. However, saying that the VIX continues to remain at 23 and above levels, which means one can continue to expect these gap ups and gap down movements going forward, and there can be a sudden 100 200 point fall or a rise in Nifty like we are seeing from the last few days. Unless the VIX cools off, you will see these moments coming in. So brace up for the same. But good point is the highest put base has shifted upwards from 15,500 to 16,000 levels. After a long time, this has happened. From the last few, 15, 20 days, the put base was at 15,500. It has now shifted upwards. So most likely we will see, a Nifty take good support at 16,000 levels and move forward. Also, another very good thing is the PCR has moved up above 1, and we are not seeing much of call writing around the 16,300, 400, 500 strikes. That means Nifty is ready to break out above the 16,500 levels soon. So all in all, the data is positive, and most definitely we might see a good run up, soon in the this coming week. Um, from the stock specific front, banking is one sector which witnessed lot of short covering, and some more short covering is possible in this sector. Some amount of selling can be seen in the metals space. um, However, IT also witness a lot of shorts, and some amount of short covering can come in into the IT space as well. So look out for these two sectors, IT and banking, for some good buying opportunities. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. India Bulls Housing Finance result was okay. Loan book continues to decline sequentially. It was down by 2% at 59,000 crores. Mix of developer loan remains high at 29%. Gross NPA remained constant quarter on quarter at 3.2%. Also, company has cut its guidance for next couple of years on the retail disbursement front by around 20%. So, for example, for FY23, their disbursement target was 1,80,000 crores, which they have brought it down to 1,50,000 crores. Also, on the balance sheet front, earlier they had guided that 15% of the loans will be on balance sheet only, and now they have increased that to 30% of on balance sheet loans. So, to that extent, the balance sheet will become heavier. These are incrementally negative points, and we are neutral on the stock. 197 communication, that is Paytm, result continued to remain weak. Revenue grew by 6% quarter on quarter, and net loss was at 760 crores, similar to last quarter. We are neutral on the stock. Thermax result was below expectation because of big pressure of rising steel prices. Gross margins declined by 6% quarter on quarter and 10% year on year. However, EBITDA margins came at 7% versus expectation of 8%. Profits were flat year on year at 103 crores against expectation of 140 crores. Despite the on result on the face of it being below expectation, the on the demand side, the demand is pretty robust. This being one of the largest private companies in capital goods space, the industry tailwinds are visible in the company's order inflow in last 10 years at 3,400 crores for March quarter against 1,500 crores in the Q4 of last year. Order book came at 8,800 crore, which was 70% higher than last year and 20% higher than December quarter. Demand is being driven by metals, cement, refinery, sugar and distillery sectors. So this is good news for the whole capital goods sector. PGCIL result was in line with expectation. Revenue and profits grew barely by 3% year on year. We are neutral here. NTPC result improved. Revenue grew by 24%. Profits grew by 14%. We are positive in the long term. Cochin Shipyard result has improved. Revenue grew by 12% year on year, and margin was stable at 24%. We are neutral on the stock. GE T&D India result is below expectation. Company has in the past consistently not delivered on the results front. And top line this quarter again year on year has declined by 27%, and company posted a loss at EBITDA level, so can be ignored. BHEL result is above expectation. Revenue came at 8,060 crores, up 12% year on year. However, it was lower than expectation of 8,700 crores. Gross margins also declined by 400 basis points year on year. EBITDA margin, EBITDA came at 1,150 crores versus expectation of 520 crores. This was mainly because of write back in the other expenses line item of around 400 crores, which seems a one-off in the current quarter. So we need more clarity on this point as to what this exactly is. So that is why we have a neutral rating on the stock, because the top line was much below expectation. Power Mech projects result has improved. Revenue and profits both grew by 20%. Company is into EPC work for power, mining, railways, bridges, and buildings. So it is a very diversified company. Order inflows in FY22 were healthy at 13,500 crores compared to last year's just 4,500 crores. And overall order book has also increased to 18,000 crores compared to last year 9,000 crores. So we are positive on Power Mech projects. Thank you.
Good morning, everyone. ADF Foods announced their results, and results have declined. Revenue was muted at 5% growth. However, the major disappointment came at EBITDA margin, which declined both YOY and sequentially. This is something we have been seeing in other consumer companies also. But because of the raw material price inflation, companies are not able to maintain their margins. Gufic Oil Lubricants announced their results, and results have improved. The sales grew handsomely at 23.5% YOY, and even the EBITDA margins have improved sequentially, kind of stable on YOY basis. Narayan Hridayalaya announced their results, and the company continued its good momentum, and this time also the results were marginally above expectations. The stock is trading 34 times FY23, which is little on the higher side, but however, giving the pedigree of the management and also the business overview, we are positive on Narayana Hridayalaya. Pfizer has announced their results, and results have improved. The company reported a good improvement in EBITDA margins on YOY basis, and also marginal increase on the sequential basis. This is one of the names we like in MNC space. Supriya Life Science announced the results, and results have improved Q&Q. The reason why we're comparing Q&Q, because the last quarter, that is the Q3, we have seen this company reported margins at 35%, which was below than their guided at the time of the IPO listing, that it should be around 40%. And we have seen a good decline in the stock since then. However, this time the EBITDA margins have come 41%, which is something in line what the management has been guiding, because Q3 is their seasonally weak quarter. So we are positive on this name, and expecting more overview and more guidance from the company in the scheduled con call. Pratap Snacks announced their results, and results have been declining, and this is continued in this quarter as well. Metro Brands Limited, that is the recently listed shoewear company, has announced their results, and results have improved YOY. However, the stock is trading 55 times FY23, which is little on the expensive side, which we believe. Gufic Bioscience announced their results, and results is okay. We like this name. That company is doing structural changes in their business, and which is posing well for them. This time also the EBITDA margins have improved YOY and Q&Q. So there are small changes the company is doing, which is getting reflected on the numbers as well. So we like this name from a long-term point of view. Indigo Paints announced the results, and results have improved this quarter. Sales grew by 13% and EBITDA margins has also improved on both YY and Q&Q basis. Although the stock is trading 54 times FY23, however, in paints, we are more positive on the bellwethers like Asian Paints and Berger than Indigo. Zydus Life Science, that is the erstwhile Cadila Healthcare, announced their results, and results were below expectation. However, there were certain one-offs in the numbers, and if we adjust for that, the stocks is the result were kind of in line. However, like other companies, other pharma companies, this company is also facing double-digit pricing erosion in US, which might be difficult for the company to maintain their margins going forward, because US is a major chunk for companies like Zydus Life Science. So, though this result was below expectation on the face, it is in line. Uh, there's another update about the Zydus Life, that they have announced their buyback, and the company is going to do it at the rate of 650 against the current ongoing CMP is around 350 or so. So this would keep the stock in momentum, and we don't see much upside from here, especially while the buyback is going on. Hester Bioscience announced the results, and results have declined during the quarter. Another news is that Glenmark Pharma has got Five's observation from US FDA for its Goa plant, though we don't know the nature of the observations, but we believe this is a negative development for the company. We might expect a negative reaction in today's trade on this. Thank you.
Good morning, everyone. CE Info Systems has announced the result. The company has posted improved set of numbers for both on the revenue and the margin front, with revenue growing by 31.5% Q-on-Q, and EBITDA margins has improved to 43.9% versus QOQ of 35.9%. Gati has posted decline set of numbers for the quarter, both on the revenue and the margin fund. Revenue declined by 8.9% QOQ. EBITDA margins came in at 0.9% versus QOQ of 3.4%. SP Apparels has posted improved set of numbers for the quarter. Revenue grew by 1.4% Q-on-Q. EBITDA margins came in at 17.5% versus QOQ of 15.4%. Stock is trading at 9.7 times TTM EPS. Thank you.
Yeah, good morning. An update on steel sector. The government has removed the 5% import duty on met coke and 2.5% duty on coking coal. Apart from this, the government has imposed 50% export duty on iron ore of all grades from 30% previously. Duty on iron ore pellets has been fixed at 45% from previously zero. On pig iron exports and other steel exports, the duty will attract of 15% from previously nil. Going forward, the immediate impact of government's decision on reducing steel and steel making raw material exports could be a decline in iron ore fines and pellet shipments. Likewise, exports of flat steel and stainless steel by the country's steel majors are likely to be affected. As far as iron ore prices are concerned, factoring the 50% export tax, the prices could fall by 1,500 per ton in India. Iron ore pellet prices are expected to drop by around 5 to 7,000 per ton. As far as steel prices are concerned, if we factor in the reduction in coking coal and iron ore prices, we can see a margin reduction of 12,500 per ton. One must also note that the iron ore benefit will not be available to Steel Authority and Tata Steel, as their costs are fixed. So the impact on margins will be even more on these two companies, followed by JSW Steel and JSPL. So overall, this is negative for the steel sector. On results front, Heidelberg Cement result was above expectation. Sales volume came at 1.23 million ton versus expectation of 1.24. EBITDA per ton came at rupees 961 versus expectation of 733. Nuvoco Vista's result was marginally above expectation. EBITDA came at 425 crores versus expectation of 412 crores. Margins were 20 basis points above expectation at 14.5%. JK Cement result was marginally below expectation. Revenue came at 2351 crores versus expectation of 2216. EBITDA came at 384 crores versus expectation of 392 crores. Shri Cement result was below expectation. Sales volume was in line at 8 million tons. EBITDA per ton came at 1134 versus expectation of 1318. The stock is trading at EV by EBITDA of 18 times FY23 EBITDA. Sarda Energy result result has improved. Revenue came at 1,058 crores versus 999 crores sequentially. EBITDA came at 352 crores versus 321 crores quarter on quarter. Margins have increased by around 19 basis points at 33.2%. Stock is trading at EV by EBITDA of 3.8 times on trailing basis. Thank you.
Good morning. So, Amara Raja Batteries announced its results. The results were below expectation. Revenue came in at 2,181 crore versus an expectation of 2,425 crore, which grew by 7.8% on a sequential basis, but grew by 3.7% on a YOY basis. EBITDA margin came in at 10.1% versus an expectation of 12.1%, sequentially 12% and 15% on a YOY basis. The stock is trading at a PE of 13.5 times FY23 EPS. JK Tyre announced its results. The revenue has declined. Revenue came in at 3,312 crore, which grew by 7% on a sequential basis and 13% on a YOY basis. However, EBITDA margin declined to 6.9% versus 8.9% QOQ and 15% on a YOY basis due to this was mainly due to higher input costs despite all-round cost reduction and efficiency improvement measures as well as price increases taken from time to time in all tire categories. The management, however, said that there is a good demand pickup post unlocking of COVID-19 restrictions, resulting in higher volumes in commercial vehicles and passenger car tire segment. Exports contributed significantly to the top line and were higher by almost 60% as compared to the previous year. The company has undertaken an expansion of its passenger car radial tire capacity at a cost of rupees 530 crores. The additional volumes are expected to be available by the end of 2023. The stock is trading at a PE of 7.7 times FY23 EPS. Jamna Auto Industries announced its results. The results were above expectation despite rising raw material costs due to improved operating leverage. Revenue came in at 626 crore versus an expectation of 476 crore, which grew by 41% on a sequential basis and 29% on a YOY basis. EBITDA margin came in at 13.9% versus an expectation of 13.6%, which was 13.4% on a sequential basis and 14.9% on a YOY basis. The company continues to maintain a dominant market share in the OEM segment, which is approximately 68% in FY22. The stock is trading at a PE of 27.4 times FY23 EPS. Thank you.
So apart from the results, now results for upcoming Wednesday, that is 25th. AIA Engineering is expected to announce result, and results are likely to show declining trend, mainly on account of increasing cost and decline in margin, which is likely to decline by almost around 100 pips year on year, though revenue is likely to increase by around 20% year on year. Apollo Hospital is likely to report results, and results are likely to show improvement. Revenue and EBITDA both are expected to increase by around 14% year on year. Then Bata India is likely to announce result. Here again, the results are likely to show improving trend with revenue and EBITDA both are likely to increase by around 16%. Coal India is also likely to announce result and likely to show improved set of number. Revenue is likely to increase by around 30%, but EBITDA margin is likely to show improvement to around 27% versus 24% last year. Then Interglobal Aviation, that is Indigo, is likely to announce results, and here again the results are likely to show improvement year on year. Though quarter on quarter there will be some dip because December quarter is seasonally strong quarter. Year on year the revenue is likely to increase by around 29%, and EBITDA is likely to increase by around 83% year on year. The National Aluminium is likely to announce result. Here again, the results are likely to show improving trend with revenue increasing by around 6%, but EBITDA is likely to increase by 13% quarter on quarter. Quarter on quarter EBITDA margin is also likely to expand by around 200 basis points. NHPC is also likely to announce improved set of number with year-on-year increase in revenue by around 8% and EBITDA by around 34%. SH Kelkar is likely to announce results, and results are likely to be okay. They had given business update and which is indicating that the results will be more of a flattish in this quarter. Then Torrent Pharma is likely to announce result. Here again the results are likely to be more of a flattish to marginally declining, wherein margins are likely to decline year on year by from 30% to 27%, and revenue is likely to increase by around 19%. V-Mart Retail is likely to show okay set of numbers with revenue growing by 37% and EBITDA margin is absolute terms is likely to grow by around 11%, but EBITDA margin is likely to decline year on year by around 150 basis points. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.